I'm going to give you my top 5 takeaways that I've learned from trading this year and how you can use those top 5 tips to aid your trading into 2023. Let's get into that and more right now. Hey there traders, it's Andrew Mitchem here, the owner of the Forex Trading Coach with video and podcast number 485. I want to give you today my top 5 trading tips and takeaways that I've taken from trading the Forex market and other markets this year as we draw towards the end of 2022. Let's start with number 1. So number 1 is trade the markets that are active. And what I mean by that is different markets have different conditions throughout the year. And of course, you never know what those conditions are going to be ahead of time. But what you can do is you can see which particular markets are trending well at the time, which are moving, which have volatility, and therefore which markets are giving you the best opportunities. Now that in the Forex market can be sometimes some pairs go quite flat. Other times you'll find that most pairs go quite flat. Other times everything seems to be moving. So as a phrase I use going back to my farming days of 20 plus years ago of make hay while the sun shines. I'm sure you've heard that phrase, and it's no different in trading. If the market conditions are active, things are moving, things are volatile, there's great conditions there, that's the time to be identifying trades. Now you go and look at the crypto market this year, for example. There have been some massive moves earlier in the year in the crypto markets, but you go and look at the last month, you look at like, let's say November and now into early December, most of the crypto markets are just completely and utterly flat. And I haven't taken hardly any trades on the crypto markets in the last, say, like almost 2 months now, because the market conditions have not been there. Yet the Forex markets have been fantastic. The metals are starting to move. Oil right now is dropping a lot. So the other markets are showing some great opportunities. So trade the markets that are giving you the best trading conditions at that time. Takeaway number 2, you should trade what you see and not what you think. Really important that you do that. As a technical trader and not a news fundamental trader, I trade what I see on the charts. So therefore, I'm trading what I'm seeing is actually happening, not what Andrew or someone else or someone on a news station thinks might be going to happen. And you see, things have changed slightly when it comes to the news. No longer do we get those massive, great big spikes and big gaps and non-farm payrolls, that's jumping up maybe 300-400 pips in 30 seconds like it used to some 10, 15 years ago. And when you think about what's happening globally right now, like almost everybody's sort of heading into recession. Everybody's got inflation. Everybody's lifting interest rates. And so that differential between different countries, like you used to have a number of years ago, for example, when the Japanese interest rate was negative and the New Zealand was huge, it was like 6-7% or something. There's always a massive differential. Whereas today, everybody's sort of moving in the same direction. So therefore, you can't go, oh, look, the unemployment in country A is really bad, because likely it's the same in other countries. Or, my country might be going to lift the, let's say you lived in the US. The US is going to lift their interest rates, therefore the US is going to be strong. Well, no, because Australia is lifting, New Zealand's lifting, Canada's lifting, Euro's lifting, the British are lifting. So it doesn't really have a great deal of significance any longer. So you've got to trade what you see on the point number 3. Get yourself educated and get yourself a trading system, a trading plan or mentor, and a trading community. I cannot underestimate how important that is. And the reason I bring that into my takeaways from this year is that consistently throughout the year, I've received email after email after email. I see posts on our forum site, all these feedback just coming through with the same theme of, look, Andrew, I joined you as a last resort, or I joined your course but didn't really put a lot of effort in up front, and now I've gone back and revisited and now it's going well. I didn't know anything about trading. I've done exactly what you've said and it's going really well. So the community aspect, the strategy that works, the mentorship, someone to bounce ideas off, someone to follow, someone to watch, a group of people all thinking the same, right-minded people, all with the same goals and outcomes, all trading the same way, with none of this backstabbing and arguing and rubbish going on that happens on almost every other forum out there. You've got to have a community of like-minded people, sensible, smart, forward-thinking, progressive people, but also people with knowledge and experience. And that's what we bring to the table, and that's why so many of our clients are just making incredible success from their trading. Yes, there's some effort required on your part, and if you're not willing to put the effort in, then we're not the right people for you. But if you are and you want to make this work, we're a good match. So that was point number 3. Point number 4, be consistent in what you do. Show up. Turn up, put in effort, look at the patterns that you want to trade, understand what it is that you're doing and do it consistently. If the market conditions, as in point number 1, if the market conditions are there, you trade the pattern, you trade your strategy, your risk is known, it's low, it's controlled, it's the same throughout the year. You know, if you put in that consistency, that is when you will achieve results. If you're the sort of person that just sort of rocks up and go, oh, what's on the charts right now? I'm going to force myself to take a trade because I'm ready, or I can't be bothered to see what it does, or it's only a demo account, it doesn't really matter. Oh, I forgot to put a stop loss in. Oh, I put in 10 times the risk that I should have. Oh, look, the trade worked. How lucky was that? Oh, someone on YouTube told me that cryptos are going to be, Bitcoin was going to be $100,000, which by the way is what they told you is going to happen by last Christmas. And now look what it's doing this year. If you're that sort of person, you've got to change. You've got to get that consistency back into your trading. So that's a really important point. Number 5, you've got to enjoy your trading. You've got to wake up each day looking forward to trading. You've got to start the beginning of the week looking forward to getting back into it again. And to do that, there's a few things I think really help. The first point would be only look at taking a trade on the close of a candle. That allows you to know exactly when the market's closing and when you can go and look at your charts. Number 2, try to get onto the slightly higher time frame charts. It means that less is more approach. Your trading is more consistent. The quality of the information given on a higher time frame chart. I go down to sometimes 2 hours and the odd time on a live webinar, 1 hour charts, but the majority of my trading will be 4 hours, 6, 8, 12, daily, weekly, monthly. And so that, you've got that nice blend of real long term, you've got slightly shorter, you've got your dailies where you can have multiple trades in a week, and then you're going down when you can or when you want to have a look at, some of those sort of 12, 8, 6, possibly 4 hour charts, but only on the close of a candle. Maybe look at your charts once, twice, 3 times max a day, you will do well. So I hope that helps. Next week, I'm going to talk about your year in general, and what you can learn from your year of 2022 and how you can make 2023 the best trading year yet. So looking forward to helping you with that next week. But for now, have a great week ahead, and I'll see you next week for the last video and podcast for the year. Bye for now.